We're going to get going in just a moment. I've just started recording this, so I'll be able to post it later because it looks like at this point only about a third of the class is here. And once again, I'm going to apologize quite a bit for the last minute thing going on here, but I am feeling really not very well this morning. Let me make sure. As people come in, I have to unlock them. And I'm working on two screens, so when it looks like I'm looking to the side, I'm actually looking at my other screen. Okay, it is 10:30. We are going to get started. Feel free to unmute yourself if you have a question, or if you have a question and you don't want to unmute yourself, or if you don't have a microphone, feel free to send it over on the chat. I'm going to try to monitor the chat as much as possible. So before we begin, is anybody really confused, or does anybody have questions on what we went over yesterday? As I said, feel free to just send it over on the chat or unlock. Okay, so what I've done for today is the homework is really complicated. They have a lot of complicated charts, and LIFO and FIFO is difficult as it is, and the homework has a lot of complicated charts. So I'm planning on lecturing by basically going over the homework problem. Now, the first problem that I'm going to go over, which is 8 to 11, was a little bit complicated. So I prepared a worksheet for it, which is basically in the same format that we would do, putting it into the computer. But I thought it would be easier just to demonstrate. I posted this worksheet on Canvas. So if you want to download it right now, take a moment and download it. Otherwise, you can just watch me work on it because, as I said, it's going to be extremely similar to the homework. Oh, excuse me, sorry. Okay, so if I don't have any questions, I'm not seeing any questions on the chat. I'm monitoring the chat. Let's just get into the remainder of the lecture. I'm going to try to lecture as little as possible, and then we're going to just get right in and do. Okay, so we talked last time about two different things. We talked about a perpetual versus periodic inventory system. Okay, hold on a second. I have some people who came in and they're locked. I just have to unlock the users. So just give me one moment. Unlock. And I'm so happy to see so many people here. This is being recorded, and I will try to grab the recording and post it to Canvas as well. So when we have a perpetual versus periodic inventory system, and we remember perpetual is the new fashioned one, and periodic is the old-fashioned one. And you'll see as we go into the problems why it's old-fashioned. What I like to say with perpetual versus periodic inventory system is, as an accountant, you have a job. Now, if you're using a perpetual inventory system, your job as an accountant is to provide a cost for each sale right at the point of sale. So basically, when I lecture this, I say basically that your job is to determine which ones are we selling. So basically, your job as an accountant is to answer the question, which ones are we selling? We'll get to the answer to that in just a moment, but just remember that that is the question that we're answering. Now, if you're using periodic, your job is not to provide a cost of each sale because remember, you're not keeping track of the sales. So if you're using periodic, your job is to provide a cost, to provide a cost to the ending inventory. So basically, if you're using a periodic inventory system and you're the accountant, your job is to answer the question, which ones remain? Does everybody see the difference between that? Any questions? Let me unlock a couple of people. Give me a moment. Unlock. Mobile. I'm glad to see so many people here. And once again, I'm going to apologize for the last minute thing. I really feel really bad today. I feel awful. My back is killing me, nauseated. I had a really bad evening. And as soon as this class is over, my husband's taking me down to have a rapid COVID test. So I didn't want to put you guys in jeopardy. So when I woke up this morning, I decided the best thing to do was to put class online. I apologize again, but I just wanted to make sure that everybody was safe. Okay, so question before I move on, everybody see the difference? So if you work for a company that has a perpetual inventory system, every time there's a sale, you have to observe the sale and say, okay, which ones are we selling? And I'm going to answer that question in just a moment. If you're using a periodic inventory system, you're not managing your inventory at all during the month. And at the end of the month, you take a physical inventory, and then you're going to ask the question, which ones remain? Now let's move on to our 4 inventory calculation systems that we have, although one of them I didn't even bring up anymore. I didn't bring up anymore. I'm sorry. I'm a little off today. Didn't bring up yet. So the first one we went over last time was specific identification. So under specific identification, if you're using perpetual, you have to figure out for each sale, which ones are you selling? And honestly, the homework problems that they have with perpetual when they use specific identification, most of the way that they mention the problem, it's more periodic than perpetual. But once again, I'll take you through those problems to make sure that you understand. But if you're using specific identification, if you're using it with perpetual, you have to decide once again at every sale, which specific units are you selling? If you're using periodic or the ending inventory, which specific units remain? So again, just very quickly to go over that. Let's say you were working at a car dealership. A car dealership would likely use specific identification because each car is unique. Even 2 red Ford Broncos, they will be different because they have different vehicle identification numbers. Even if the cars are exactly the same, have exactly the same colors and exactly the same accessories, you can still tell one car from the other because each automobile is unique because it has a vehicle identification number. So if you were working at a car dealership and you were using perpetual, every time you sold a car, you'd match up the vehicle identification number to the purchase invoice and you'd say, what did I pay for this specific car that I'm selling right now? And that would be the cost of goods sold. If you worked for a car dealership and you were using periodic, at the end of the month, you'd go around the lot, you'd count up which cars are left, and you'd match them up to the invoices with the vehicle identification number to figure out the cost of the inventory on hand. Does everybody see the difference? Let me know if you have questions. This stuff is really hard. This stuff, I have to tell you, is really hard. Inventory management is really, really high level in accounting. And if you had a job as an inventory manager, this would be a really high level. Okay? Questions before I move on? Now we move on to the two flow assumptions that I talked about. So remember, when we use LIFO and FIFO, we enter the land of pretend. We don't care what happened in real life. We just pretend that the inventory flows this method. So the second method that we're going to look at is FIFO. And remember, FIFO is a flow assumption, which basically means with a flow assumption, we don't care what happens in real life. My own personal name for flow assumptions, as I told you, is the land of pretend. I really like that land of pretend. And for those of you who are accounting majors, when you move on to higher and higher levels of accounting, frequently you enter what I call the land of pretend, where you have to pretend that something happened where it may not have really happened in real life. So I gave an example of earnings per share. Another example is when you deal with partnerships and you have a partnership liquidation, you have to kind of pretend that the partnership went into bankruptcy when it really didn't and go through all the calculations. So our second one is FIFO, which is a flow assumption. So remember, we just assume that the flow of inventory happens this way. So remember, the letters in FIFO stand for first in, first out. And in English, that means that we assume the oldest items are sold before newer items. So basically, we're just rotating our stock. Okay? So now, if you use FIFO with perpetual, you just assume that every time you come to a sale, you are going to sell the oldest units on hand. And I have a wonderful activity planned for next week. Hopefully I don't have COVID, so we can do it in class. I told you I thought I was going to do it with M&Ms, but I think I've decided to do it with jelly beans because I have more colors available with jelly beans, but we're going to use colors to simulate all the different layers of the inventory. So hopefully it will help you to visualize what's going on with the inventory. But if you use FIFO and perpetual, you just assume that the oldest units are sold first. Okay, questions? Now, FIFO with periodic is a little bit difficult because you have to look at it kind of a little backwards. Because what happens if you sell all of the old units? So for example, if Giant gets rid of all of the old milk, what are they going to have left in their inventory? Only the newest, freshest milk. So with FIFO and periodic, it's easier because there's only one calculation during the month, but it's harder because you have to think backwards. With periodic, you have to think, if I sold the oldest units, then only the newest units are going to be left in the ending inventory. So with periodic, we just assume that the newest units remain in ending inventory. Now, the nice thing about FIFO, I'll tell you a couple of nice things about FIFO. One nice thing about FIFO is whether you use perpetual or periodic, you get exactly the same answer because what's oldest never changes. The oldest units never change. The newest units will change depending on where we are in the month. So for example, if we're March 12th, March 11th would be the newest units, but if we're March 25th, March 24th would be the newest units. But whether we're March 12th or March 28th, March 1st is going to be the oldest units. So the nice thing about FIFO, as I said, is you get the same answer whether you use perpetual or periodic. You just have to approach the problem, slightly differently. Any questions? Nobody's been asking questions yet, and this stuff is really hard. Everybody doing okay? Okay, once again, feel free to just unmute yourself or use the chat feature to come in. Okay, if nobody's asking questions, I'm going to move on. The next flow assumption that we're going to look at is LIFO. Oh, another nice thing that I wanted to say about FIFO, I'm starting to get confused here. Another nice thing that I wanted to say about FIFO is that you can use FIFO around the world. In the United States, we use what is called GAAP, which is Generally Accepted Accounting Principles. Internationally, they use IFRS, International Financial Reporting Standards. LIFO is not allowed under IFRS. So if you wanted to do accounting in the UK, if you wanted to do accounting in France, any other place where they use IFRS, and most countries around the world do use IFRS or something very close to IFRS. The United States is really the only country that uses GAAP, but GAAP is like the gold standard. GAAP is much better, or I'm not going to say better. GAAP is much more stringent than IFRS. There's a lot more judgment allowed in IFRS than GAAP, so that's why the United States doesn't want to go to IFRS. So anyway, LIFO, once again, is another flow assumption. So once again, we don't care what really happened, we just make an assumption. Okay, so the letters in LIFO stand for last in, first out. And once again, translating that to English means that we assume that the newest items are sold before the older items. So once again, the bad thing about LIFO is because the newer items change where you are in the month. So again, our newest items March 5th are going to be different than our newest items on March 18th. So LIFO, you're going to get a different answer when you use perpetual and periodic. But as long as you approach the problem the correct way, as long as you think, what is my job, you should be able to get that correct answer. So when you use LIFO with perpetual, remember you're answering the questions, which one am I selling? So in this case, you're going to assume the newest items are sold first. When you use periodic, you're going to assume that the oldest items remain in inventory. So remember, periodic, you're looking at the problem backwards. The last letter of LIFO and FIFO are out. So out, they're talking about sales. So they're telling you what to do with the sales. They're not telling you what to do with the ending inventory. So you have to think backwards for the ending inventory. Everybody good so far? I'm hoping everybody's good. I feel so bad because everybody was doing so well on Tuesday. I was so excited. Everybody was following along so well, and we were doing so well with inventory. And I was just so sad that I woke up this morning feeling so sick. So I'm not getting too much feedback. I would appreciate a little feedback, at least that you're hearing me and seeing my screen and all of those things. So just let me know that you're doing okay and you're still following along. We'll go on to the last one. And in about 2 or 3 minutes, we'll just go on to the sheet 1 that I have. If you feel like following along with the worksheet, that's okay. If you don't, that's also okay. You can just watch me. Okay, great. Thank you, Shirley. I appreciate that. Okay, sometimes, especially when I'm here in my basement, you can see I'm kind of in my basement over here. This is my broadcasting area, so my husband and my animals don't disturb me while I'm in class, but I'm down here in my basement area, isolated, and I'm just looking at a screen, so I don't really know if you can hear me or not. Okay, the last one that we're going to go over is weighted average. I will tell you that weighted average is not used much outside of the banking and finance industry. Weighted average is usually used for stock. So if you're talking about, let's say, shares of Apple Computer or shares of Microsoft, okay, the reason for that is physical inventory does have some difference between one or another, but with stock, there's really no difference. So with inventory, even with two identical cars, I might care which one I'm going to buy, but with two identical shares of stock, they're absolutely identical. There's no difference between one share of Apple and another share of Apple. So we're going to look at weighted average. Of course, for me, I've never worked with physical inventory. I worked at a bank, so my experience is with weighted average, and we used perpetual inventory system because periodic was not good enough. Even in the 1980s and 1990s when I was working on this, periodic did not give us good information. So I used perpetual, and I had to calculate an average cost for each sale, which was actually quite challenging. So with weighted average, with perpetual, you're going to assume each sale is at the weighted average cost of the units right before the sale. So basically what you're going to do is right before the sale, you're going to calculate the average cost as being the cost of the beginning inventory plus the purchases minus the sales in dollars. And you're going to divide that by the beginning inventory plus the purchases minus the sales in units. So basically, you're going to take the goods available for sale right before that sale, goods available for sale in dollars, divided by goods available for sale in units, and then you're going to get the average cost. So if your average cost is, let's say, $63.20, you just assume that all of the units in that sale are sold at the average cost, $63.20. Now, with periodic and weighted average, it's a little bit easier because you just take one weighted average at the end and you just assume that your ending inventory is at the weighted average cost. So since when we use a periodic inventory system, we're not keeping track of the sales, all we're doing is keeping track of all of our purchases. So with periodic at the end of the month, you just take your beginning inventory plus your purchases in dollars. Then you take your beginning inventory plus your purchases in units. You divide one by the other. You get a weighted average cost. Again, let's say it's $63.20. And you just assume that all of your units in the ending inventory are at that average cost of $83.20. Okay? Any questions before we move on? Feel free to unmute yourself or throw it over in the chat. If I don't hear, excuse me, if I don't hear anything in a moment or two, either on the chat or, as I said, feel free to unmute yourself. I'm going to go right over to sheet 1, and we're going to start working on the homework problem. I actually typed over the homework problem. I was actually quite busy this morning typing into Excel because I think it's easier. I have the side to go off and do calculations, and I think it'll be quicker. So as I said, feel free to either join me with the Excel or just watch, and I will make sure, so I have to unlock some users here. I'll make sure to post this video so the people who didn't see it can come in and go and see it. So right now I'm going to go to sheet 1, and right over here on sheet 1 starts our questions 8 to 11 in the chapter 5 homework. So I'm going to zoom in here so you can see. Questions 8 to 11, we are given this inventory activity. So on March 1st, we started with a beginning inventory. We have 220 units that have a cost for each unit of $53.40. Then on March 5th, which is my birthday, another reason why I like this problem, we have a purchase of 285 units at an average cost of $58.40. So on March 9th, we have a sale of 380 units at a price of $88.40. So because these questions 8 to 11 is on a perpetual inventory system, if you read the question, they say that questions 8 to 11 is all on perpetual inventory. When we're on March 9th, we have to stop dead. We cannot move on. So when we're on March 9th, our question that we're going to ask is, which 380 units are we selling? Under specific identification, they're going to tell us. They'll say, okay, it's 200 units from the first lot and 180 units from the second lot, or whatever it is. If we're using FIFO, we're just going to assume that we sell the March 1st layer before the March 5th layer. If we're using LIFO, we're going to assume that we sell the March 5th layer before the March 4th. And if we're using weighted average, we take a weighted average of these two, and that price is what we're going to cost the sale of 380 units. Everybody ready to go? Any questions? Okay, again, when I'm looking over like this, I'm on my second screen. I was just checking the chat and making sure that everybody's unlocked. Okay, let's get ready to go with this problem. So the first thing they want us to do is calculate the goods available for sale. Goods available for sale is just the beginning inventory plus the purchases. And with Excel, I can use Excel to do the calculations. So it's going to make it very easy for me to do the calculation. So I'm just going to zoom out a tiny little bit so you can see what I'm doing. So our beginning inventory is 220 units. I'm just copying from above. Our March 5th purchase is 285 units. Our March 18th purchase is 145 units. Our March 25th purchase is 270 units. So they've also given us, the unit cost. So I just type in the 53.4, 58.4, 63.4, and 65.4 that were just given in the problem. Notice I just did the units and the unit cost. In fact, I probably could have just copied and pasted. So now using Excel, if I was using a calculator, this would be annoying because I'd have to take 220 multiplied by 53.4, put the answer here, 285 times 58.4, put the answer there, 145 times 63 times 4, put the answer there, 270 times 65.4, put the answer there, and then add it all up together. With Excel, I can just do it with formulas. So I'm going to tell Excel here in cell D15 to take the 220, so I'm going to use the point and click, and multiply by the 53.4. So notice how Excel uses colors and displays the cells that I'm using when I click on the cells in the formula. And Excel is really smart. When I copy this down, it's also going to do the calculations for rows 16, 17, and 18. So I hit enter. I have 11,748. Now I could use copy and paste, but this fill handle down here in the bottom right-hand corner is the easiest way to copy and paste. You don't want a four-headed arrow, that's not correct. But when I swipe over the box on the bottom right-hand corner, I get a skinny plus. I hold down my left mouse button and just drag it down, and notice how on each line it's calculating each correct purchase, right? The number of units multiplied by the unit cost. So now to calculate the goods available for sale, they're going to want the total units. So I can just click in cell B19 and I can type a formula equals sum, SUM. That's a formula that tells Excel to add whatever is in the parentheses. I open up the parentheses. I just select the 220, 285, 140, and 270. Close up my parentheses, hit enter, and I've summed up the units. Another way that I can do it is when I click on cell D19 and I want to sum up the total costs, I can use the auto sum button. If I'm on the home tab, the auto sum is in the editing over here on the right, but I actually like to go to the formulas tab because the auto sum is right here. So I just click the sigma. It adds up my four numbers. I hit enter, and now I've answered the first part of the question, goods available for sale. And in fact, you're going to have to put it in pretty much this way. My problem is that once I did this and put it into the worksheet, if I go back in, I'm going to get different numbers. So I'm just going to have to work with this worksheet. But once again, I made it look as much like the homework problem as possible. So this should help you quite a bit with the homework problem. Any questions on goods available for sale before I move on? Is everybody following okay? Okay, just once again, let me know. Everybody's pretty silent today. Now, I think the next question that they asked in the homework, number 9, I forgot to write it down, but I think it was really easy. I think they just wanted the units that are in the ending inventory. So to calculate the units that are in the ending inventory, we take the 920 available and subtract the 2 units that we sold. So the number of units in ending inventory would be 920 minus the 380 minus the 250, right? The goods available for sale minus the sale. Okay, now I want to go into the first one, which is going to be the cost of the ending inventory in FIFO. So the first thing that I'm going to do is I'm going to put a freeze in my panes so we can always see the perpetual inventory. But first I want to zoom out just a little bit so we can make sure that we can see the chart. Oh, that was zoomed out way too far. I think that might be good. So now what I'm going to do is I'm going to click in cell A11 and I'm going to click on the View tab. In the window, I'm going to click Freeze Panes and Freeze Panes. So what that does is it freezes everything above and to the left of the current cell. Since there's nothing to the left, I'm not freezing everything to the left. So what I've done is I've frozen lines 1 through 10. So no matter how far I scroll down, you can still see lines 1 through 10. So let's go into the cost of the ending inventory. And let's go into FIFO. I'm going to have to be careful. I would love to be able to draw, but for some reason, whenever I click the drawing icon on my laptop, Excel freezes. So I have to be careful. So I'm going to try to make notes on the side. Okay, so the first thing that we have to do is we have to look at our job. So we see here that in this part of the problem, the next one that we're doing perpetual inventory and FIFO. So remember, we have a job. Our job, when we have a perpetual inventory, is to cost each sale at the point of sale. And under FIFO, that just means we assume the oldest units are sold first. Okay, so March 1st, we're just going to start off with our beginning inventory. So March 1st, we're going to have 220 units that have a unit cost of $53.40. Okay, now on March 5th, we're going to go and purchase another 285 units at $58.40 each. So after we do that, we're going to have two inventory layers. We're going to have our first I'm sorry, I forgot to put the inventory balance. So I'm sorry, after March 1st, we're going to have 220 at $53.40. You all have to do this with a calculator, but if I take 220 and multiply it by $53.40, the cost of my beginning inventory is $11,748. I'm sorry. Let me zoom in a little bit. Now on March 5th, we're going to purchase 285 units at 58.4. That's given in the problem, that it's a purchase of 285 and 58.4. So I want you to imagine an inventory storeroom. When you purchase, Pat, the forklift person, just drives up and drops off another layer into your room. So you had everything that you have before, you just add another layer of inventory. So after that purchase, we have our 220 units at 53.4, but we also have 285 units at 58.4. So if I multiply those two together, so 220 multiplied by the 53.4 is 11,748, but now we also have 285 times 58.4, which is $16,644. So on March 5th, we would have a total of 220 plus 285. We have 505 units available as of the end of March 5th, and the total cost of those units, 11,000 plus 16,000. Everybody following along okay? As I said, inventory management is very difficult. This is a super high-level problem. I would solve this in intermediate accounting basically the same way. Okay, now let's move on to the sale on March 9th. I want to zoom in a little bit. I think this is just too zoomed out. Okay, so when you come to the sale on March 9th, you have two layers available. You have available 220 units. At 53.4, which are the older, and 285 units at 58.4, which are the newer units. So whenever you do this, you always have to go to your instructions. So I want you to imagine that you are the inventory manager. Somebody comes up to your room and says, I want 380 of your stuff. So it's your job to decide which specific 380 units go to the customer. Well, we go to our instructions, and your instructions say, hand out the oldest ones first. So under FIFO, you want to rotate your stock. You want to get rid of the older units before the newer units. So again, if you were the inventory manager and you had these two layers available and you wanted to listen to your boss says, rotate the stock, get rid of the older ones before the newer ones. The first thing you would do is hand out the oldest 220 units. So the first thing that you do is sell the 220 units at $53.40. But if you handed over just those 220 units, the customer would get angry at you. They would say, wait a minute, I asked you for 380 units. I didn't ask you for 220 units. So once you handed over those older ones, you would owe them some more. So the 380 that you sold minus the 220 that you handed over so far means that you have to give over another 160 units. Since you handed over all of the $53.40 units, the remainder 160 has to come out of the second lot, the $58.40. So notice if we hand over the 220 oldest plus 160 in the newer lot, we total the 380 units that we sold, but we made sure to sell out of the $53 units before we moved on to the $58 units. Does that make sense? Are we okay? Nobody's answering too much. I want to make sure that everybody's following okay, because as I said, this stuff is really hard. So now to calculate the cost of goods sold, I'm just going to take the 220, multiply it by 53.4, 160 multiplied by 58.4, and then add the two together. So for March 9th, my cost of goods sold is going to be $21,092. Okay, good. Other people are saying that they're following along. Okay, great. Make sure to ask questions because as I said, this is super hard. This is really hard. But next week, I'm going to do a demonstration with different colors. So each one of the costs, each one of the layers will have a different color. So hopefully it's going to help you. It's actually an activity adapted from my board game. So now we have to go into the land of pretend. So now we're going to have to model in the inventory balance what would have happened had we sold those specific units. So if we started off with this inventory balance at the end of March 5th, and then we sold that amount on March 9th, what would we have left? Well, this layer would be gone, right? We would have given it to the customer. So we don't have any more $53.40 units. Out of the 285 units at $58.40, we sold 160. So we're going to have remaining 285 minus 160, which is going to be 125 units. So once again, if I take the 285 and I subtract the 160, Oh, didn't mean to do that. We have remaining 125 units at the $58.40. So after that first sale, our inventory balance would be 125 at 58.4, 7,300. By the way, the green triangle just means that I have an inconsistent formula. And the way I explain the green triangle is Excel thinks it's smarter than me. Excel is really smart. Excel is not smarter than me. I know what I'm doing. Everybody good? Everybody following along okay? All right, now that we've got the cost of our sale, we know that our sale of 380 units cost us $21,092. We can measure the revenue from up here and we can calculate the gross profit. That comes later in the problem, but I don't know if I'm going to get there because we still have a LIFO, average cost, and specific identification to get to. I'm sorry, I doubt that I'm going to get to all of those. Now let's move on. Purchases are really easy because purchases just get added to the inventory balance. There's no decision that you have to make. Again, if you think about it, if you're the inventory manager, when a purchase happens, you just get a delivery and you just stick it in the room along with all the other stuff that's already there. So before our purchase, we have 125 units at 58.4. We don't lose them. We just get additional units. So on March 18th, we're going to purchase 145 at 63.4. And again, that's just going to add to the room. We still have the 125 at 58.4. Now we have an additional 145 units at 63.4. So I'm just going to do the multiplications. I'm just going to take 125, multiply it by 58.4, 7,300. 145 times 63.4 is 9193. So as of the end of March 18th, I have 270 units on hand that cost us, the sum of those two, 16,493. March 25th is also going to be very easy. It's the same thing, it's just a purchase. So after March 25th, we're going to have 3 layers instead of 2 layers. So moving down to our purchase on March 25th, and again, notice how we can still see everything up above. On March 25th, we're going to purchase 270 units at $65.40. So again, now we're just going to have 3 layers. So I have the 125 at 58.4. I have the 145 at 63.4. And now I have 270 at 65.4. So I'm just going to do the 3 multiplications. Another reason why I chose to do it in Excel, I thought it would be a little bit of a time saver because I could use Excel to do the calculations for me. So now, as of the end of March 25th, we have a total of 540 units on hand, and it cost us $34,151 to purchase those 540 units. All right, now we have the last decision that we have to make, because as I said, purchases are very easy. It's sales where we really have the decision to make, and we only have one sale at the end of the month, March 29th, then we're ready to count everything up and be able to do it. So on March 29th, somebody comes in and says, I want 250 of your stuff. Okay? So once again, you have to think of your job. Under a perpetual inventory system, your job is to decide which 250 units to give to the customer. So to decide which 250 units we hand over, we have to go to our instructions. So our instructions are FIFO, which is first in, first out. So the answer is we are supposed to hand over the 250 oldest units. So again, right before the sale on March 25th, these are our 3 inventory layers, and they go from oldest to newest. So our oldest is 125 at 58.4. Our second newest is 145 at 63.4, and our newest is 270 at 65.4. So again, on March 29th, it is our job to decide which 250 units we hand over. And again, under our instructions, we're supposed to hand over the 250 oldest. So the first thing that I'm going to do is hand over my oldest units, 125 at 58.4. I can't give that customer any more than 125 units because that's what I have on hand. We're modeling what would have happened in real life had we used FIFO. So now, if I give that customer 125 units at 58.4, the customer is going to look at me and say, Debbie, can you count? I didn't ask you for 125 units. I asked you for 250. So I have to give the customer another 125 units to make up the order because 125 plus 125 would equal the 250. So I go to my next oldest units, which are 63.4. I have more than enough to make up the order from the next lot. So I would take 125 units at 63.4 as a part of my sale. So I'm going to do those calculations. I would hand over to the customer 125 at 58.4, which would be my oldest layer. Then I'd go on to the next oldest layer and make up the remainder of the order, 125 at 63.4. So notice I'm going to sell 250 units. And the cost of my sale, $7,300 plus $79.25 gives me 15,225. Now, all I'm going to have to do is I'm going to have to model what my ending inventory looks like after I've performed that sale. So once I've sold these units, I don't have this layer anymore. I've given them to the customer. And once I've sold 125 of these units, I only have 20 left because 145 minus the 125 would be 20. So after this sale, I should have remaining 20 units at $63.40. And I never touched the final layer, so I should have 270 units at $65.40. Do the multiplications. And my ending inventory will have 290 units, the 20 plus the 270, at a total cost of the 1,268 plus the 17,658. So my ending inventory will be 290 units at 18,926. So at this point, what I'm going to do is I'm going to take away the freeze for a moment. So I'm going to go to View, Freeze Panes, and Unfreeze Panes. So just so we can see the entire chart on the screen, I'll zoom out so we can see basically the entire chart. I think I can zoom in a tiny little bit more. So this is what the chart is going to look like. All of your purchases are just going to be copied on the correct date. Make sure that you book all your sales based on the whether you're using LIFO or FIFO, and then model what the inventory balance is going to look like after. So now for the totals, the ending inventory is easy because the ending inventory is at the end of the month. So our ending inventory is going to be 290 units at the 18,926, but our cost of goods sold, we're going to have to add. So our cost of goods sold is the sum of the cost of all of the sales. So in the first sale, we sold 380 units. Second sale, we sold 250 units. So together during the month, we sold a total of 630 units. The cost of sale number one is 21,092. The cost of sale number two, 15,225. Add those two together. And I have a total cost of goods sold for the month, 36,317. Yes, Shirley, I will save this on Canvas. I just noticed, I can see over here, I don't know if you can see it, but they're giving me instructions on the recording. And I actually am recording this right now. I'm verifying. I can see the recording button going and the timer is going. So as soon as this class is over, I'm going to go into the permanent recordings and I'll make sure to post it on Canvas because I can see it looks like only about maybe a half or 2/3 of the classes here. So I'm actually kind of upset because I know this was last minute, but I'm feeling awful. You're welcome. I feel terrible that I canceled class and so many people missed today, but I was so afraid that I was going to get somebody sick or, cause a big outbreak on campus or something like that. So as soon as this class is over, my husband's taking me down to urgent care for a test. Okay, are we doing well with FIFO? I know this stuff is really, really hard. It really is difficult. So let me know if you have questions. If I don't see, oh, thank you, David. Yeah, I appreciate it. I haven't been able to eat in a day. I'm pretty hungry. Let's move on. So if I'm not seeing any questions, I'm just going to move on to LIFO. So basically, in your business, you would not use LIFO or FIFO. You would use one or the other. So you wouldn't solve this problem two ways. You would just solve it one way, but it could be solved any way. Now, the reason why companies use LIFO is if you use LIFO, you wind up paying less taxes. So you still do whatever happens in real life. This is just an assumption. So even if you use LIFO, you can still sell your inventory like it's FIFO. You just enter the land of pretend. But if a company uses their inventory using a LIFO basis, if prices are rising, they will wind up paying less taxes than FIFO. Okay, so that's the reason why companies will use it. So now I'm going to go back to my freeze again. So I'm going to go up top. I think this time I'm going to do an extra line and I'm going to freeze above line 12. So I'm going to go to my view, freeze panes and freeze panes. And now I'm going to scroll down to, I copied the same chart over. And this time now, we're going to use LIFO. So remember, whenever you're solving these inventory problems, you as an accountant, you have a job. If you're the inventory manager, you have a job. So under perpetual inventory system, your job is to provide a cost for each sale right at the point of sale. So remember, you're asking the question at each sale, you're asking the question, which ones are we selling? Now, under LIFO, remember the letters in LIFO stand for last in, first out. So translated to English, we assume that we sell the newer items first. So with LIFO, I want you to imagine that if you're the inventory manager anytime anyone comes to your window and says, I want some of your stuff, I want you to imagine that your boss is whispering into your ear, we want to impress this customer. Give them the newest, hottest, freshest items that we have in inventory. Don't go back to the old, dusty stuff. I want the newest items, the freshest items that we have available. That's what I want you to give this customer. So we're just going to start right away with the assumptions. And remember, purchase, there's no decision. A purchase just adds to the room. It's when we come to a sale that we have to answer the question, which ones are we selling? So I'm going to try to pick up the pace a little bit because believe it or not, we only have 20 minutes left in this class. So under FIFO, my beginning inventory is still given in the problem, 220 units at 53.4. So in the inventory balance, I'm not going to forget this time. I'm going to put in the 220 at 53.4. And I think the computer does the calculations for you, so you don't have to sit there with your calculator and do most of the multiplications. But to calculate my inventory balance, I take the number of units, I multiply it by the cost, and I have, as of March 1st, I have $11,748 of inventory. Moving on to March 5th. March 5th is a purchase. So again, we went through this before. Purchases are easy. It doesn't disturb anything that you had before. You just add to what was available. So on March 5th, we're going to purchase 285 units at 58.4. So now after that, we're going to have two layers. We're going to have our original 220 units at 53.4. Now we have an additional 285 units at 58.4. And again, I'm just going to do those multiplications. One of the reasons why I decided today to do it in Excel, and I thought it would be too confusing in Connect, because I just thought that there would be just too much scrolling up and down that you wouldn't be able to get a sense of the problem. So right before our sale on March 9th, we have 220 plus 285. So we have 505 units available, and the total goods available for sale, I add the two, $28,392. Okay, everybody ready to go? Now we go on to March 9th, and we have our sale. So on March 9th, somebody comes up to our room and says, I want 380 of your stuff. So again, on March 9th, somebody comes to our door and says, I want 380 of your stuff. You have at that point 505 to choose from. So it's your job to hand that customer 380 of the 505 units available. And it's 380 because that's how many you sold, right? It's given in the problem that you sold 380 units. So under LIFO, your instructions are, your boss is whispering in your ear, give that customer the newest items. We want to impress this customer. Make sure that they get the newest items. So the first thing that you're going to hand them is the newest items, 285 units that each cost 58.4. But again, I want you to imagine that once you hand over those 285 units, the customer is going to say, can't you count? I asked you for 380. 285 doesn't equal 380. So if you've already given them 285 units, you're going to have to give them an additional 95 units to make up the total order of 380. So notice the 285 plus the 95 equals the 380. So since you've given them all of the units in the second layer, the only thing that you can do is go into the first layer. So you're going to give them 95 units out of those 220. They cost $53.40. So under LIFO, you just assume that the cost of sale is going to be the 285 times 58.4 plus the 95 at 53.4. So again, we add those two together. And we have a total cost of goods sold for March 9th of $21,717. After we do that sale, then we have to model what our inventory looks like. So now we've gone from the bottom up instead of the top down. FIFO, we went from the top down because we sell the older before the newer. With LIFO, we sell the newer before the older, so we're going bottom up. So after our first sale, these are all gone. We handed over all the 285 to the customer, and we handed over 95 of these units to the customer. So what's going to remain is 220 minus the 95 is going to be 125 units at 53.4, and nothing else remains after that first sale. So I take 125, multiply it by 53.4, and then they're going to want you to total that up, which is 125 and 66.75. Okay, after that we have two purchases. So once again, there's no decision with the purchase. With a purchase, you're just going to stick it in the room. You just have more inventory. You have more layers, right? Imagine them different colors, right? If you spray painted them or put tags on them, the oldest items have a yellow tag, right? The second newest items have a red tag. The third newest items have a blue tag, right? So you can tell the difference between them. So on March 18th, we're just going to purchase 145 at $63.40. So after we do that, we have the 125 at 53.4. We don't lose what we already had with the purchase. We just have more. So now we have 145 at 63.4. So since I have about 13 minutes left, I'm going to try to speed this up. So multiply the two, add them together. So I add the units and I add the total cost. I'm going to do the same thing for March 25th. March 25th is just another purchase. So again, I just put the units purchased, which is 270, $5.40. So on March 25th, I don't lose what I had before. I still have the 125 at $53.40. I still have the 145 at $63.40. But now I have an additional 270 at $65.40. So I'm going to do my multiplications. I think in the homework, it does the multiplications for you and the additions, so you don't have to add these all together. But that's what it's doing. It's just adding the units available and the total cost. Now we have a final decision on March 29th. This is what our room looks like right before the sale. We have three piles, older, and newest, right? So on March 29th, customer comes in and wants 250 of our units. That comes from the sale, right over there. So if you're using the LIFO method, then you're just going to assume that you give the customer the 250 newest units. So in this case, you have enough in the third pile, right? In the third pile, the newest pile, you have 270 units. The customer desires 250. You have more than enough to give them. So for the last sale, you would give your customer 250 of the $65.40 units. So the cost of your sale would be 250 multiplied by the $65.40, which gives us 16,350. So after that sale, you wouldn't have touched the 125 at $53.40. You didn't sell any of the 145 at 63.4, but you sold 250 of those units. So if you started off at 270 and sold 250 of those units, you would have 20 remaining at $65.40. So we take the 125, multiply it by the 53.4, 145 times 63.4, and 20 times 65.4. So our ending inventory as of the end of March, since we don't have anything that happens after that, 290 units with a total cost of $17,176. And our cost of goods sold would be 380 plus 250 units. So we would have sold 630 units. My apologies. Let me take out the freeze for a moment. And finally, the cost of our goods sold, the cost of the first sale, 21,717. Cost of the second sale, 16,350. Cost of goods sold, 38067. I know this was a lot today. I told you inventory management is very difficult, but I promise I will be in next week. I'm going to come in with a big old bag of jelly beans. They're going to be portioned out. I've already planned it. In fact, I have gloves, so I'm not going to even touch the jelly beans to make sure that everything's all nice and safe. And we're just going to move the jelly beans around because, again, the different colors are going to mean the different layers. Okay, I have 8 minutes left. I do want to make use of the 8 minutes. So the next one that we're going to work on is what is known as a weighted average. So with our weighted average, what we're going to do is at each time, we're going to take a weighted average cost of our ending inventory. The weighted average cost of our ending inventory is going to be the cost of the sale. After the sale, we're going to have remaining that ending inventory at that price. So let me move on. Let me try to pick up the speed a little bit so we have this available. And again, I will put this up on Canvas to make sure that the people who weren't here can see it and the people who were here can see it a second time. So I'm going to go one last time, view, freeze panes, and freeze panes. So now I'm going to move down to weighted average. And under weighted average, our purchases work the same. So on March 1st, we're going to purchase 220 at $53.40. So we have 220 units, 53.40, and I do the multiplication. Now on March 5th, we're going to purchase another 285 units at $58.40. So after we do that, we're going to have 220 at $53.40. And we're going to have 285 at $58.40. Now here's where the average cost comes in. I'm going to add the units to calculate the total inventory that we have available on March 5th, which is 505 units. I'm going to do the multiplications. So 220 times 53.4 and 285 times 58.4. Now, what I'm going to do is I'm going to add the total cost. But now what I'm going to do is I'm going to calculate the average unit cost. So to calculate the average cost, I'm going to take 28,392, the inventory balance right before our sale, and I'm going to divide by the number of units, 505, again, just what we have right before the sale. So I'm just going to take the total and divide by the number of units right before the sale. So I'm going to do that in this cell. I'm going to take the 28,392. I'm going to divide by the 505. And notice I have an average cost right now of $56.22 per unit. So what I'm going to do is I'm going to assume that my sale is at that same $56.22 per unit. So when I come to the sale on March 9th, oh, and I put my freeze in the wrong place. Hold on a second. I should have put my freeze here, sorry. There we are. So now what I've done, once again, is I've taken the 28,392, I divide it by the 505, and I get an average price of $56.22 per unit. So on March 9th, I'm just going to assume that I sell 380 units at that average price of $56.22 per unit. In your book, they're going to want you to round. So I take the 380, I multiply it by the $56.22, and my cost of goods sold to 1,363.6. Now, for calculating my ending inventory, from this point forward, we can't really think of layers anymore because we don't sell in layers. We're selling at the average cost. So if we start off with 505 units and we sell 380, we have remaining 125 units, and we're going to put those 125 units in the average cost. So $56.22 is going to be our average cost for the 125 units. The 125 multiplied by the $56.22 means that we have 7027.5 in inventory after the first sale. Now moving on, we're going to have two more purchases. Two more purchases. Once again, we're just going to add them together, and we're going to do the same thing that we did last time, just add the layer, but now we're going to take that extra step and calculate the average after we add each layer. So on March 18th, we're going to purchase 145 at $63.40. So now after that, we have 125 at the average cost of $56.22. And then we purchase another 145 at $63.40. That should be $63.40, sorry. Now I'm going to skip over the totals because I only have 2 minutes left. On March 25th, we're going to purchase another 270 at $65.40. So after that, we'll have the 125 at the average of $56.22. Then we have 145 at $63.40. And we have 270 at $65.40. So now I'm going to total my units. I'm going to do the multiplications. Total up my cost. So now, once again, to calculate the average cost right before the sale, I'm going to take the total cost of my goods available for sale and divide by the number of units available for sale. So basically, I'm going to take the inventory balance right before the sale. So my average price is going to be the 33,878.50, divide by the 540 units. So I'm going to take the 33,878, divide it by the 540, and notice I get an average price of $62.74. So I just assume that my last sale is 250 units at that average price of $62.74. So at this point, it is exactly 11:50. So if you guys, I have the recording, so I should be able to take attendance from the recording. But if you guys can just put your name in the chat box before we end today, that'll make taking attendance really easy for today. And again, I'm going to apologize for today, but I really feel terrible. I really feel like I have the flu or something. So I just wanted to make sure that everybody was nice and safe. I will post this recording, and I have a 5-day weekend to get my test done. So hopefully, I'm going to cross my fingers. I will be back in school on Thursday. Everybody knows we have no class Tuesday because of fall break. Okay, so thank you. Whenever you put your name in, unless you have questions, you're done. If you have questions, just stay on the line and I'll be happy to answer them.